Hey guys, and welcome back to my channel. In today's video, I'm going to talk about strata insurance premiums, why they're currently rising, and I'm going to give you a few tips in terms of what you can do if you currently live in a strata or you're considering purchasing into a strata. Really quickly, if this is your first time here, my name is Hassan Juma. I'm a local Vancouver realtor, and I create these educational videos that'll help you in your buying or selling journey. So without wasting any more time, let's get started. So if you've paid any attention to the news when it comes to residential real estate, especially here in the Vancouver area, over the last 6 months or even a year, you will have heard about strata insurance and the premiums of strata insurance raising to, in some instances, uncontrollable levels for certain buildings. And I get a lot of questions from clients in terms of why this is. And I guess the best way to explain it is a lot of it comes down to supply and demand. So some of the similar things that we talk about when it comes to real estate pricing, similar things can be said for strata insurance. Now, if you ask strata insurance companies in terms of why are costs raising, they will tell you that their risk level when insuring all these new strata units that have hit the market over the last 2, 3, 4 years has gone up considerably as land values have increased and replacement values, building values have increased. That basically puts the insurer in a position where they have to insure, obviously, a larger value of a commodity or a larger value of a building. So now their risk level has increased. One of the best ways I can describe it is suppose you were an investor and you put $100 in the stock market and you decide that for $80 you want to put that into a safe investment, and maybe with 20% or $20 you want to put that into something that's higher risk. Now, for an insurance company, what has happened over time is strata building starts have increased so much that a lot of these companies have been forced to carry on more risk than they're actually comfortable doing. So some of these buildings, they're worth $300, $400, $500 million. It can be a little tricky to insure, which leads me to my next point, is that there's not as many companies now that are willing to provide insurance for these types of buildings. So now when you have 3 or 4 insurance providers, so the supply of insurance providers is much lower than the demand. When you think about all of these new strata buildings being created, you now have an issue with supply and demand when it comes to providing insurance. And when that happens, costs tend to go up. It also makes me think a little bit. I used to work in the telecom industry before. Here in Canada, there's 3 or 4 major players, and it was just kind of interesting how when pricing would change for one, it would change for another. There wasn't a whole ton of competition when it came to pricing in telecom. Things are a lot different now, of course. But in an oligopoly scenario where you have 3 or 4 large players, that tends to dictate pricing as well. I'm not saying I agree with these reasonings or I take all of it as gospel. I take it with a grain of salt, but this is what we've been told from insurance companies. And if you really take a look at it, it does make some sense as to why these costs are increasing. So now that we know kind of why this is happening, now I'm going to give you a couple tips on what you can do, again, if you're deciding to purchase into a strata or you currently live in a strata. If you're purchasing into a strata, I don't think that you can write an offer these days unless you've done your due diligence prior to writing the offer that doesn't have a subject to finding suitable insurance. So when you put a subject in an offer, what that means is you have a contingency. You have something that you need to satisfy before fully committing to that property. So one of the things that we always do, whether we're putting it in the offer or we're reviewing it beforehand, is we're getting an insurance quote for the strata unit. So when my clients or buyers are looking at purchasing units, we get the master strata policy for the insurance, and before we've fully committed to the property, we've already sent that off to insurance companies so that we know what we're going to pay for insurance. Now, really quickly, your own homeowner insurance is different than the coverage on the strata on the entire building, but the reason why that is important is your own coverage needs to cover the deductibles that are in the master policy. Now, I'll probably do another video on this because it can get pretty extensive, but long story short is you need to make sure you have ample coverage to cover these deductibles. So we'll get that quote in advance. And the other reason you want to do it, I mean, you may be moving into a new building, You may know people that have moved into the building. You know they got insurance. It's not often a question of, can I get insurance, my own homeowner's insurance for this unit? It's what is that going to cost me per year? Because again, that is where the big change has been over the last few years, is these premiums have risen. And before you commit to a property, you want to know exactly what you're going to have to pay for insurance on an annual basis. Now, number two, the other thing that you want to do as well is you always want to obtain, as I mentioned, the master policy for the entire building, the insurance policy that'll come from the strata council or the property management company. You want to review those, and one of the things you want to specifically look for is the deductible for water damage. So water damage is basically where the most significant impact has been in insurance costs. The way to look at it, the way I think about it, is water has the ability to create extensive damage not only to your own unit, but to neighboring units, to units below. Water, obviously, gravity, it can travel all the way down and it can affect a whole number of units. And most of the risk that the insurers are fearful of stems around water deductibles. We've seen strata deductibles raise from $10,000 to $25,000, $100,000, $250,000. I'm in 2 new buildings, and both of my buildings, they're 1 year old, and the deductible is $100,000. So again, my own homeowner's policy needs to cover this deductible. As that rises, as that 100,000 rises to 150 or 200,000, now my cost goes up to be able to cover that. So again, for you, you want to look at that master policy. You want to specifically look at the water damage portion and what that deductible looks like, because that's pretty much where we see most of the significant jump. So that's point number 2. And lastly, the third thing that you can do, and this may seem kind of obvious, but if you're currently living in a strata and you notice that something is happening with the building, perhaps you spotted a leak in a common area, in the garbage room, you notice some water dripping, something that may not directly affect your unit. I think sometimes a lot of people, they'll just kind of view it and think, whatever, I'm in an older building, it's fine. They don't say anything about it. But I think one thing that we can all do living in strata is when we see stuff like this, we have to report that to the strata council and to the property management company. It's just more important than ever that if we notice things in the building that are maybe deteriorating, that we say something about it, we let strata know, because it's better to nip stuff in the butt early rather than have these insurance type problems down the road. And the last tip I'm going to give you, this is super, super important, is your master strata policy for insurance. It's going to have typically a 1-year expiry date. And you really, really need to place this date in your calendar. It's as important as like your wife's birthday, Valentine's Day. It's even more important than some of these. And the reason I'll say that is what happens at that year mark is often your deductibles change. The amount that your own policy needs to cover changes at that point. So if we're not familiar, we're not aware of that date could come and go. Your deductible could jump from $50,000 to $100,000. You're still only covered for $50,000. And in that case, what happens is if there's water damage that stems from your unit, your insurance provider is going to say, look, your policy, we're giving you $50,000. And now the property management company, or the strata corporation essentially, is going to come to you for the $50,000. And I've heard of this happening, not to this degree. There was a water deductible that raised $10,000, and the policy wasn't changed by the homeowner themselves. They were on the hook for $10,000. Again, we've seen jumps from $50,000 to $100,000 to $200,000. Can you imagine if that policy had jumped $150,000 or $200,000 and that homeowner was on the hook for that? So again, this is the final tip for you, but it's so, so important. Find out when the master policy ends. Mark that date in your Google Calendar. Make sure you set a reminder for it. Review the new policy at that time and immediately talk to your own home insurance provider and make sure you still cover the deductibles. So there you have it, guys. That's a little bit of a rundown on strata insurance, why the rates are raising, and what are some of the things that you can do about it moving forward. I hope you found this video valuable. If you did, I'd love it if you could like and subscribe. If you have any questions for me, or you want to buy or sell real estate in the Vancouver area, I'd be super happy to help you out. All of my contact info is below in the description. But other than that, thanks for watching and have a wonderful day.